Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Sunday, December the 11th, 2022. I'm beginning here with the NASDAQ, and I am going to keep this on the short side. Both indexes, the S&P and the NASDAQ, have opened lower, but let me just put a little spin on that. Because I'm sure, as many of you are aware, the NASDAQ future and the S&P future have rolled to the next month's contract, and that happens to be March of 2023. So we're trading in March of 2023, and that's how it's being charted. And you can see the market closed on Friday at 11,546, now trading at 11,645, and it's down. So it's like, how does that happen? It's because the contract rolled. Now, how are we going to deal with that on an Elliott basis? It could be a 1-2, 1-2. So if we're really looking for a continuation of the downside, which I am, it leaves enough room that it could go quickly and it could go fast. In other words, fill that gap real quick. And that may happen. If not, it continues to go up, then we might be running into just a 1, an ABC 2, and still that drop. But that is what I'm looking for. And also, I leave on the Fibonacci extensions for a minute wave 5. So remember, what we're really counting here is the beginning stages of the intermediate third wave. That's where it kicked in and it started. And within that, the first move is going to be a minor wave 1, because the total intermediate third wave will consist of 5 waves of minor degree. And those are going to be labeled 1, 2, 3, 4, and 5. Here they are on the minute level for the first minor wave. So minute 1, 2, 3, 4, and now we're into that 5. So again, fibs to complete it, again, based on structure. Again, that 1 being a little bit big, the 2 being a little bit bigger. I would think that 618 is not going to hold it. In fact, 618 might just be wave 3. And then we get a 4 and then a 5. So ultimately, I think this minute wave 5 and this first minor wave may end up down here about 11,100. Or even into within this zone. So more important will be the structure. So again, looking at it on the hourly chart, we have that possibility that it's going to be a little bit more protracted in terms of this second wave. If this is 1 of 5, 2 of 5, 3 of 5, 4 of 5, 5 of 5, done. Once minute wave 5 is in, whether it's here, here, or here, I'd be looking for another wave 2. This is unfortunate, but hopefully they will happen a little bit quicker because they're shorter in terms of degree. If we're finishing a minor wave 1, we'd be looking for a minor wave 2. So the moves will be smaller. But the one after that, the minor wave 3, we'd be looking for back again into some stronger downside moves. So also, next week, we cannot forget that what we have coming in, nothing really tomorrow. So tomorrow is nothing, but then on Tuesday, the FOMC meeting begins. But more importantly, we have the CPI number that comes out at 8:30 a.m. Eastern. That's on Tuesday. On Wednesday, we have the Fed meeting. And then we have Jerome Powell's conference call, which starts at 2:30 p.m. Eastern. Thursday, we have jobless claims, Philly Fed, retail sales, and industrial production. Could be a big moving day. Friday, PMI, composite flashed. So it's a Purchasing Managers Index composite flash. How are their prices? If their prices are coming down, it should be a decent hint towards a little bit of a correction in inflation. Now, going over to the S&P, it basically is the same story. I have marked the completion, so minute wave 4 at Friday's highs, Here in the S&P, that's 39.90. And what I'm looking for is a minute fifth wave down to complete minor wave one. Again, looking at structure, this is a the S&P does seem to just be ahead of the NASDAQ in terms of the move that it performed on Friday afternoon. Gaps up again because of the contract change, but the contract itself is down 8 3/4 right now. So it should be pretty quick that it'll get down and the market will agree and will drop and continue to drop in this minute fifth wave. Support 39.24, which was nearly reached on Friday. Then we have 39.04 down to 3900. And then that 618 comes in at 38.84. That's going to be the first level according to structure. If there's 5, this minute 5 and minor 1 may complete. Otherwise, we have continued support at 38.70, 38.55 down to 38.50. Ultimately, we have 100% fib level where minute wave 5 would be equal in length to minute wave 3, and that comes in at 38.19. Is it possible? Yes. We are seeing this flow. We are seeing some, or reading some of the news. You read some of the stories, and they kind of talk about how this may turn into more of a year-end sell than people buying as positions get adjusted, as traders, funds all start to prepare for year-end. That's kind of where we're moving into, and the Fed decision is really, I think, going to hike it. One way or the other, it's going to hike the intensity of what we do from that point to the end of the year. So for tomorrow, I am continuing to look for downside. I don't think the upside will, if we come back up from where we are, 39.85 to 39.90 is where I'm thinking it should stop. I don't find that they have too much reason to believe that they got to start buying this up in anticipation of a 50% rate hike versus a 0.75% rate hike. 0.5%, excuse me, 50%, that would be something amazing. The market would not go up. I retract that statement, and what I really meant was that a 50 basis point hike versus a 75 basis point hike. So we could get stuck in a range until Tuesday's CPI. Anybody's call on what that CPI may or may not do. Anyway, for tomorrow, I am again looking for either it's not going to be dead silent in the water, or we drift and we continue to put in the balance of minute wave 5. That's where I'm going to leave it, and our next update will be on on Monday, December the 12th.